always look at gas prices. Overall, you can also talk natural gas, Jeff. But I do wonder, any forecast at all for demand destruction given that price I just quoted?
No evidence whatsoever of it occurring yet. And I think one of the key points is, people are worried about a recession. China is in a recession with all the lockdowns, which is creating a lot of slack in the system. So I like to point out, you're at $112 a barrel right now with China still under lockdowns. What happens when China comes out of lockdowns and takes that slack out of the system? There's a lot of upside going into the second half of this year.
Yeah. All right. Well, you gave me a good question. So what happens, Jeff, when China actually reopens and gets its economy fully functioning again?
Well, let's kind of go over the fundamental story that creates that upside, and then I do want to tone down or tame some of the bullishness because the geopolitical picture has softened somewhat. So the fundamental story is you got China, one foot on the brake, the other one on the accelerator. Which means as soon as they take their foot out of the brake, the acceleration is going to be significant. At its peak, global oil demand contracted by 2.5% based upon those lockdowns in China. It's down probably about 1 to 1.5 right now, which means, as they take their foot off that brake, demand's going to pop. At the same time, you have a seasonal increase of 3 to 4 million barrels per day. So a lot of momentum in oil demand on a global basis. At the exact same time, U.S. and the West go on holiday, which will just exacerbate the situation. And then with Russia, questions about the tariffs and everything, but the overall impact on oil supplies in Russia is going to continue deterioration. So our upside is 125 on crude as we go into the summer months. Now, what are the geopolitical overtones that have kind of dampened the bullishness? One is, the U.S. government's talking about tariffs. Tariffs as opposed to sanctions. It punishes Russia in terms of losing that extra revenue, but it doesn't create the misallocation of barrels on a global market. So it's much easier to cope with. And I think people are going, hey, the situation out of Russia is not nearly as bullish as if you get tariffs. The other factor is relationships between the U.S. and key oil producers like Saudi as well as Venezuela are thawing right now, which is from overtures out of the administration. So those factors could take out some of the bullishness. So I kind of want to temper how bullish I was last time I was speaking to you. But the situation, at this point, substantial upside going into the summer.
Yeah, on that last point, Venezuela, and a lot was written about the White House potentially blinking regarding Saudi Arabia. How material could those relationships be? Granholm has not been absolute about what we might receive from, say, Venezuela.
Yeah, Venezuela is going to require a lot of capital. So even if you open it up tomorrow, the level of destruction to those production facilities, I mean, like the upgraders in the Orinoco Belt, they've been stripped for the copper scrap off of them. You're going to have to spend billions of dollars to be able to get that production up at this point. Saudi Arabia, however, it's a very different environment there. I'm not going to make any, all we've heard is that Biden's, willing to speak with the Crown Prince, but it's showing that, that relationship is thawing. That could be significant. I don't want to make any prognostications about what could happen there. It's going in a more positive direction.
Shepard Smith here. Thanks for watching CNBC on YouTube.